Okay, folks, welcome to Member Stock Chart Request and a market wrap as well. I am currently traveling. My microphone has decided to die out on me, so I'm using the laptop microphone, which is terrible quality. My apologies, but we're going to have to deal with it for the next couple of days. Let's kick things off with a chart that I posted in the forum this afternoon, and it was a chart of the S&P 500 weekly basis. This is the only chart that you need to decide which way you want to trade this market. If we hold the February lows and we rally, then you'll look to trade it to the long side. If we break and we break down to new lower lows, well, then it's all over for several months in this market. How did we do today? We did outstanding. We were long of the gold stocks. They were up. We were short of the banks and short of the S&P 500. So we had a great day. Now, for those who are fighting this market and pretending that, this is just a normal pullback and a correction, maybe you're right, but every day that goes by, we are threatening to take out prior lows. And if you ignore the fact, if we do take out the February lows, you are playing with fire with your portfolio. So members, we're going to talk in greater detail about the S&P 500, how we plan on trading it. We're going to talk more about the weekly chart and drill down to the daily chart on market wrap. So members, stick around. We're going to segue into market wrap immediately following best stock charts. Let's get to the charts that our members submitted for me to review, our gold members. I may be traveling, but I am working. Let's kick things off with a weekly chart of Tesla. Now, Tesla has had some horrible headline news of late. The shorts are leaning into the stock, but guess what? We're going to rally soon. Why? The reason is that we are trading down and into our weekly third standard deviation Bollinger Band. Does that mean that the stock is going to go running higher tomorrow? We don't know yet. Let's drill down to a daily chart in a moment. First, let's finish off with the weekly chart. We have put in a new weekly low. That is not good. So now what we need to do is identify where we have support below. Let's throw up a new support level. Okay, so I'm liking the 240 level here. You can see that it acted as resistance back here in June of 16. Prior to that, it acted as support in April of 16. So we have some history at this support level going back to, at least on this chart, 2014. So expected defense of the 240 level. Let's drill down to a daily chart. All right, so the daily chart is looking good. I like this chart. I like the setup here. Do I think that we may press down a little bit more on Tesla? Yeah, but I think I'll be sending out a buy alert very soon on Tesla. This will not be an investment. This will be a swing trade. So I will be sending out hopefully a profits taken alert in the subsequent days, not weeks, but days. Especially if this market breaks down below the February lows. I'm going to caveat pretty much every chart with that comment. So our Stokes are flatlined below 20, well below 20. The RSI is down below 30, but not overbought relative to our standards as being overbought. Technical analysis for dummies will tell you any signal on RSI below 30 is an oversold level. I think I said overbought before. That we don't use that rule of thumb. I think that's a great way of going broke in this market. We like to use the 20 level at a bare minimum. You're seeing bottoming tails on these candlesticks. That's a sign of support below. We're flirting with that 240 level. I would wait for that level. That would be a great risk reward entry point. We are leaning into the third standard deviation Bollinger Band in red here. Volume today, very strong to the downside. It's institutional distribution. Don't fight these guys. Square. Weekly chart. We don't have a new weekly low yet. I'm not making the prediction that we are. What I'm doing here, first and foremost, with these charts is first confirming if they have broken down to new weekly lows yet. If not, then that shows that they're showing relative strength versus the S&P 500, which is clearly broken down to a new weekly low. So Square is holding up well. Daily chart. So you can't buy the stock. We broke down on the 28th, we rallied back on the 29th. Today, we flirted with this resistance level again. I think it fails. And we pull back to at least $44 per share. I would not be a buyer of this stock. I would entertain it if we close above 50, and I wouldn't short it yet either. There are plenty of other stocks out there to short that are much weaker than Square. CRSP, this sector, well, at least the biotechs anyway, really broke down hard today. The healthcare sector took it on the chin. This is not a sector that I like. In fact, the pharma names broke down below the February lows. Not good. So, that being known, I am going to be very cautious with this stock. Let's take a look at a weekly chart first. We rallied off the lows of the week so far. It's only Monday, 4 trading days left to go. A lot can happen. Daily chart. Okay, on a daily chart, we have a double top. We are now putting in lower highs and lower lows. So as a long, it is impossible for us to say, okay, go buy this stock. It is not behaving properly. And we are threatening to take out $40.54. If we close below that level, it's a short all the way down to $33.80. I would book profits on that short into that level. Volume today was fairly light. Now, what I'd be looking for here, I threw up this blue line on Stokes. I'm looking for a rally and then a rollover on Stokes. I want to see a double bottom setup on the stochastics. And what I'm looking for is pretty much like we saw back here in May of 17. Now, if we consolidate along this $40.54 level and the healthcare sector begins to show signs of life, well then, it may become along, but it's not there yet, right? The path of least resistance right now is definitely to the downside. I would avoid these shares unless you're looking to short them. And again, I would only short them on a close below $40.54. Next chart up, Nectar Therapeutics. We've been involved with the stock before. We've made money with it. We've watched it. But the problem here is that Nectar, and you only need to watch a daily chart with the stock. It tells you everything you need to know. It has shown outperformance relative to the healthcare sector, the biotechs, the S&P 500, whatever metric you want to compare it to, whatever index, it's outperformed. The problem is that while we have been consolidating, we now have a double top and a confirmation breakdown and a close below this lower band of support. Now, what I think is going to happen here is that we're going to rally because there are way too many longs in this name that aren't going to believe that the end is near for this stock and is going to go into a correction. So in all probability, we're going to get a rally back up to this prior lower band of support at, let's call it, $100 per share to 101. If you're long and you're looking for an exit strategy, I would look to either A, sell my position into that rally, buy it back if we happen to manage to close back above support, now resistance, or B, stop out of your position on a new daily low. Both lines on Stokes are now trading down below the 50 level. We know what happens there, right? Rallies tend to fade. I would avoid Nectar. I wouldn't short this stock. Again, far too many other stocks that are weak to short rather than trying to short a stock which is up until today shown relative strength. Okay, members, let's get back to the S&P 500 weekly chart. Why does this chart matter?